Rebecca, thanks for joining us, and I'm glad to invite Rebecca Branch to our STS uh, monthly workshop that we have organized. The title of your presentation is the AIChE Members Guide to Understanding the R&D Tax Credit. Rebecca Branch works with the Engineer Tax Services, and one of your co-workers, Jeffrey Kimmel, is here to joining us from Philadelphia. Thank you both for joining. Rebecca is joining from Houston. Uh, I think that Rebecca, I'm going to summarize for a second, just for the record, that you are a licensed attorney in the state of Texas with 10 years of experience in working R&D tax credits. So I think a lot of our members will be very interested, of course, when they come to the need to access your services or your offices if that really becomes an issue, or they at least get the basics from that seminar to see what they need to address. So, Rebecca, thanks for sharing your script, and I'll pass the floor to you now.
Okay, great. Thank you. Thank you so much. Thank you for having us here and inviting us to talk about the R&D tax credit. So as you said, my name is Rebecca Branch. I've been doing this for many, many years. I've done a lot of R&D studies, and I'm excited to talk to you about it. So if you've never done one before, it might be a topic you don't know a lot about. So it's good to have this opportunity. So what we're going to be talking about here, a little overview, we're going to talk about, first of all, our relationship with AIChE. We have a relationship. We're going to go over the credit, how it's changed, some of the tax code, how it's calculated, and how it can help you. That's the basic thing that we want to talk about is what can the R&D credit do for you? Is it something that's available to you? Is it something you might want to pursue? So we'll go ahead and dive right in here. First of all, what's our relationship? We're not trying to be your CPA. We're not going to replace your CPA or your financial team or anything like that. We are going to be collaborating with you and with your CPA. And our goal is first of all, we want to educate you about the R&D credit. What is it? Is it something that applies to you? We want people to know what incentives there are. There are some other tax incentives that we do as well. We don't just do R&D. And there might be things that maybe you've looked at before, but maybe things have changed and it might be available to you when it wasn't before. So we want to make sure you know that. We're also just a good resource for advice and direction. Sometimes you're at a crossroads where you can't you've got a couple of different options for how you're going to move forward in your business. Maybe you're looking at expanding or doing an acquisition and you need some information on tax consequences, and we can sometimes help you with that if they're related to your research and development. And also, there is preferred pricing for people who are AIChE members. So there's it's a good relationship to know that you have us as a resource. We can answer your questions about the R&D credit and some other benefits as well. So the first thing you need to know is, yes, you do R&D. If you're working in the chemical engineering field, you're doing R&D. You probably are going to qualify for the R&D tax credit. We actually put that slide in there twice so that you know you're doing R&D. We're going to talk about what the definition in the tax code is of R&D, and once you get a chance to see it, I think you're probably going to agree. You probably are doing R&D in your field. So a little bit of context, just some background. The whole point of this credit is to encourage innovation inside of the United States. It's to encourage you to create jobs and encourage you to stay innovative, keep creating new things. The whole idea is sometimes it costs money to do R&D, to do new development, to try new things. Sometimes you don't get that money back. Sometimes you try something and it does not pan out or it's not commercially viable. And the whole point is there should be some tax incentive to doing that kind of work to take the edge off of potentially having a loss or having a lot of years before you make any money off of that. We want people to keep technology moving forward. So that's the whole point of this credit is. It was originally created in the 1980s. It was a temporary credit at the time, which meant it only lasted for 2 years, and every 2 years it had to be extended again. So it got extended 16 times before it became permanent. And it was still doing that when I started doing this credit. So every 2 years we wondered, are we still going to have jobs, or are they going to extend that? But they always did, because it's a great credit and it has bipartisan support because it's really good for the economy and it's good for business. In addition to the federal credit, which is what we've been talking about, there are 40 plus states that have some version of their own R&D credit or an R&D based incentive. So it's a program that exists in at the federal level and in several states. It's also, other countries have R&D credits as well. The important thing to know about that is, if other states and other countries have R&D credits, there's a really good chance that your national and international competitors are taking an R&D credit. So that's something to think about, is do I need to be doing this? Should I pursue this? Well, realize if your main competitor is in Canada or China or India, they're probably taking their R&D credits in those countries. So that's something to be thinking about, is, am I staying competitive in my industry if I'm not pursuing an R&D credit? So we're going to move on. We're going to talk about the attributes of the credit. So some things to know: the regulations were finalized at the very end of 2003, beginning of 2004, which, given that I just said that it was initially introduced in 1981, that's a slow that's a slow time to finalize your regulations there. But when they were finalized, there were some changes in there that broadened the definition of R&D and made it a little bit easier for more people and more industries to take the R&D credit. So if your company evaluated the R&D credit at some point, say in 2001 or before that, and they said, no, I don't think we really qualify, and then just never looked at it again, it's possible it's time to look at it again, because there have been some changes over the years. Some other things to know: when you take a credit, you can carry it back 1 year. You can carry it forward up to 20 years. So it might be something that you're in a loss right now, but you won't be in a couple of years. Might be good to get those credits on your books, get those going, so that you can take them when you do have some tax liability. Another thing to note is that you can go back 3 years and amend for the tax credit. But if you were in a net operating loss before, you can actually go back even further and take the R&D credit further back. And why is that important? Well, let's say you're in a startup situation. Maybe you haven't made any money for your first 5 years. Maybe you've been in net operating losses for a while, but now you're at the point where you suddenly are having a lot of sales, you're having a lot of gross receipts, and you're going to have a huge tax bill. Well, going back and taking those R&D credits for all those past years where you didn't have any tax liability, you carry those forward, and now you take the edge off of having that big tax bill when you've suddenly become more successful. Another thing to note is as far as how you take the credit, if you're a C Corp, you just use it against your corporate income tax. But if you are a pass-through, the credit will pass through to the shareholders, and they'll use it against the taxable income that comes from the business through their K-1. So that's how they're going to be using that. So that's some attributes of the credit. We're going to talk about some big changes that happened to the credit. We're going to talk about the PATH Act. If you don't remember it happening, or if it wasn't really on your radar, PATH actually stands for Protecting Americans from Tax Hikes, which I think is a fun name for a tax act. This happened in 2015, and it made some big changes. The biggest one was it's finally a permanent credit, so we don't have to wait every 2 years to see if we're still going to have a credit. So that was a really great thing to have happen. It just gives some stability. It means that when you're looking at it, you know you're going to be able to take this credit year after year after year. So that's great. Another big change was alternative minimum tax turnoff for eligible small businesses. So before this happened, we had this issue where there were kind of like two separate tax calculations. There's regular tax, which is what most of us calculate when we pay our taxes, and there was alternative minimum tax. And the idea was to keep people who had a lot of passive income or a lot of different businesses from paying taxes that were what they considered too low. And so the issue was alternative minimum tax couldn't be reduced by the R&D credit. And so if you were in AMT, is what we called it, you weren't getting you'd take your R&D credits, maybe you couldn't use them, or maybe you couldn't use all of it. And it was a real barrier for especially smaller and mid-sized businesses. It was a real issue for especially privately held mid-sized businesses. Well, we don't really want to punish our privately held mid-sized businesses, right? So that changed in 2016, and so that's no longer an issue. So again, if your company looked into taking the R&D credit, but it was before 2016, there may have been a utilization issue at that point, and they may have said, oh, it's not really worth it. But that changed when the PATH Act passed. So now, if you have less than 50 million in gross receipts over the prior 3 years on average, and you're a privately held company, there's no more calculating the there's no more AMT issue for the R&D credit. It still exists for other things, but for the R&D credit, not an issue anymore. And actually in 2018, it pretty much went away entirely. So there really is not that bar anymore that used to be there for a lot of people. If you're working in a privately held company, this was one of the main issues that we saw all the time before the PATH Act, was that people qualified, but they weren't being able to utilize it. So now you can, which is great. Another interesting thing that happened in 2015, it was a very big year for the R&D credit, was that how you could use the R&D credit was expanded for startup companies. So if you're a startup company, it means that you've had less than $5 million in gross receipts, and you haven't had any gross receipts prior to a 5-year period ending with the current year. So you've had gross receipts for less than 5 years. And if that happens, you can actually use your R&D credit against the employer paid portion of FICA taxes. So what this means is, if you're a new company, maybe you don't have any tax liability yet. Maybe you haven't sold anything yet. Maybe you guys are just doing R&D, you're just getting started. This can really help you with those initial bills. One of the things that you might have is you might have a lot of employees. You might be paying a lot of FICA tax in those early days when you don't have a lot of money coming in. Being able to use your R&D credit to reduce that FICA tax, even when you don't have any tax liability, income tax liability yet, is a great asset. You can do that for 5 years before you ever make any money. So this is an incentive to really help companies get started and get a good footing under them. So it's, again, the whole point is we want to encourage that growth. We want to encourage that innovation. All right, so moving along, PATH Act, that was some big stuff. Qualification of the credit. So what qualifies for the R&D credit? What is R&D according to the tax code? So as I mentioned, the end of 2003, beginning of 2004, that's when regulations were finalized. That represented a major change in what qualified for the R&D credit. Before that point, it was the discovery test, or the discovery rule. And what the discovery test said was you had to be discovering something that was new to your industry. It had to be new information, which is difficult. That's a high bar to reach, right? Now it's different. After the regulations were finalized in 2004, the standard became something that's new to your company, new to you, something you haven't done before. And so that's a big shift. It opens it up a lot more to a lot more companies, a lot more industries, a lot more groups of people. Instead of the discovery rule, what we have now is a 4-part test, and we'll go through all 4 parts of the 4-part test. But essentially, if you meet the 4-part test that's in the tax code, you have R&D. That's what we have to look at. Even so, we do see some self-censoring. We do see a lot of people saying, oh, I don't know if I have R&D because we don't have an R&D department, or because we don't have somebody with the R&D label in their job title, or things like that. Or like I've mentioned, maybe you looked into it before and it was before when the discovery test was in place, or it was before when you didn't have utilization, and you don't realize, no, you do qualify. You can use it now. So it's important to check back because things change over time. All right, so here's our 4-part test. And it's great to have this page here, but we will go through each of these 4 parts specifically. But the important thing to know on here is, for something to qualify, it needs to meet all 4 parts of this qualitative test. So our first part here is a new or improved business component. This is the permitted purpose test. So when we say a business component, we're talking about a new or improved product, process, technique, invention, formula, or software. any of those things. And when we say new or improved, we mean it's got new or improved performance, functionality, reliability, quality. So those are the things we're looking to develop. It needs to be, one of the things that people sometimes miss in here is when we say new or improved, that means maybe you have a process that you've been doing for years and years, and you realize, you know what, there's a more efficient way to do this. This has always been a 7-step process, but if we change these things, it's going to be a 3-step process, but it's going to require a lot of testing. We're going to put major investment into trying to develop this new process. It's going to be more efficient. We're going to get better quality out of it at the end. That's a process improvement, even though maybe you've been making this product for years. So some of the things that people don't think of are the major functional improvements that they work on. And a lot of times people think, oh, developing something new is going to be R&D, but that adding a major functional improvement, that part sometimes people miss. So it's important to note that. I'm going to talk now about the fourth part. I'm not skipping 2 and 3. We're going to talk about them together. But the fourth part is technological in nature. That does not mean we rely on technology. We do rely on technology, but that's not what it means. What it means is you have to rely on principles of a hard science, not a soft science. So hard sciences include chemistry. So that's an easy one. You're pretty sure you're going to meet that one. Soft sciences are usually things like psychology or economics or things like that. Usually chemical engineering doesn't tend to rely a lot on those, but so it's important to note. Also, anything aesthetic is something that's excluded if it's purely for the look of it. But for the most part, in the chemical engineering field, you're going to be relying on hard sciences. So that one's an easy one to meet. All right, so we're going to talk about the second and third parts together because they really go hand in hand. The second part is there has to be elimination of uncertainty. You have to have some technical uncertainty. It might be we don't know if we can develop it. We've got this idea, seems like a great idea. Who knows if it's possible? Might not be possible. It might be, oh, we think it's possible, but we don't know how to develop this. We're not really sure what steps we're going to take. We'll try this way. Maybe there's a different way we're going to have to try. Or it could just be, we don't know what the end design is going to be. We just don't know what formula we're going to need to get the qualities that we want. We don't know what it's going to be in its final form or design. That's what kind of uncertainty there has to be. And then going hand in hand with that is the process of experimentation. This is the third part and the last one we're going to talk about. There has to be some sort of process you go through to get rid of those uncertainties. So evaluating alternatives, running your tests, modeling, simulations, even just some educated trial and error. Those are the sorts of things that will make up your process of experimentation. Essentially, what we're talking about is application of the scientific method. That's really what we're looking for here in our process of experimentation. So those are the 4 parts. That's why we say, yes, chemical engineering does qualify, because it's pretty easy to see most of the time when you're developing anything new or improved, the reason you're doing that is for new or improved function, performance, reliability, or quality. Technological in nature, there's no question. Chemical engineering is technological in nature. That we know that. Uncertainty, you probably wouldn't be working on developing something if there weren't some uncertainty about it. And generally, you always have to go through some sort of process of experimentation to get there. So there isn't really a lot of doubt that chemical engineering is going to meet the 4-part test. It's a pretty clear one there. There are some other qualification elements, some other little things that are important to note. One is that your research can't be what's considered funded. When we say funded, what we're really saying is you need to bear the economic risk of your research. So if your company does research, creates product lines, and then sells the product line, you're definitely bearing that economic risk. If you're being hired under a contract to develop something, if they're going to pay you on a quoted fixed fee where it might cost you a lot more to develop the end product and you're not going to get paid unless you deliver it, you're still bearing the economic risk. You could still end up on the short end of that stick for sure. Where we have an issue is if they're going to pay you on a time and materials or an hourly basis, and they're going to pay you regardless of whether or not you succeed, then we're going to say, well, you're not bearing the economic risk anymore, so we're not going to include that project in your R&D tax study. That's where we draw our lines. The next issue is you have to retain some substantial rights. So if you're under a contract where you're going to have to give absolutely everything up, including your knowledge, you're not going to be able to use the things you learned on another project or anything like that, well, that's going to be an issue. But usually, for most projects, you probably retain at least some rights to whatever you're developing. So in general, it's something to think about, but it's not something that applies to most of the things that you develop. And then finally, your activities have to be inside the United States and its territories. So it's okay to be in Guam, but not okay if you're across the border in another country. The reason for that is this is an economic incentive for American innovation. So they want you to be physically inside of the United States. It's okay if you're selling it someplace outside of the U.S. That's fine. It's okay if you brought people into the United States to work on it who were not citizens or things like that. That's fine. But the work needs to be physically done inside of the U.S. Some other excluded things: research after commercial production, reverse engineering, those sorts of things. We want it to be innovative. That's the point, right? It's supposed to be innovative work. It's not supposed to be just kind of minor tweaking or kind of just sort of reversing what's already been done. All right, so now we're going to talk about quantification of the credit. This is where do the numbers come from for your credit? How are we coming up with these numbers? So there are three eligible costs. There's your qualified research expenses, or QREs, what we call them. And they come from generally three areas: wages, supplies, and contractor costs. So first we're going to talk about your wages. The wages we're going to look at are your taxable wages for services provided. So usually this is W-2 box 1. If you own your own company, it might be your self-employment wages, could be bonuses as long as they're taxable. That's what we're going to be looking at. It's got to be taxable wages, though. Very important, not gross. And as far as what qualifies, we basically have three flavors of qualified employees. It's going to be your direct researchers, going to be your direct support people, and people in direct supervision. So the classic example from the regulations in the tax code is you have your chemist in the lab doing research. That's your direct researcher. But you also might have somebody who needs to come through and clean all of the beakers and reset everything for the next test run to happen. Without that lab tech doing that, research cannot move forward, right? You have to have clean equipment in order to move forward. So we're also going to include that lab tech as a direct support person, because without them, we can't keep going. So there are some limits to that. You know, you get into, well, without the HR person hiring them, we wouldn't do research. Well, that's too far away, right? That's admin. We're not going to include that. We're including the people who are actually working on it. Similarly, for direct supervision, we're talking about the people who, those are your first line managers. They're coming in, they're checking regular progress reports, they're helping, they're giving suggestions, they're in all of those meetings. They may be coming to the lab to help offer suggestions. Those are your direct supervision people. If you're talking about the head of the company who maybe hasn't been to the lab more than once this year, that's probably too far away. We're talking, unless it's a small company. It could be the head of the company is your main researcher, but we want to make sure they're in pretty direct contact with the actual research happening. So those are going to be our qualified employees. And we're just looking at qualifying a portion of the wage you're paying, the taxable wage that you're paying them. That's where our numbers are coming from. Our next category is going to be supply costs. So they're tangible personal property that's used or consumed in the R&D process. That's the general overall thought there. So when we're talking about supplies, we're talking about if you're having to run multiple test runs, all of the chemicals, everything that goes into that is going to be, as long as you're tracking how much you spent on it, is going to be a potential R&D cost. What's excluded? More general things like pens and paper, anything that is going to be capitalized, like your equipment, that we're not going to include the equipment cost. We're looking at the cost of the actual supplies you're using or materials you're using in testing. And one of the examples of something that is Excluded would be your general utility costs, but something that's actually includable is going to be extraordinary utilities. I bring it up because this is actually my favorite qualified research expense, is extraordinary utilities. So in general, if you've got your testing facility, it should have water, it should have electricity. We know that. That's not going to be includable. But if you're running a automotive test parts and you have to have a distilled water line specifically run into for R&D purposes, or if you are doing highly specialized experiments and you need extreme high voltage or something like that, those are the kinds of extraordinary utilities that are going to be included. Aside from that, any kind of prototypes that get scrapped, or basically anything that needs to be thrown away after you finish testing it, that's going to be the stuff that we're going to look at. So moving along, contract research expenses. So the general test as far as whether or not somebody's doing R&D is going to be similar to what it is for your employees, but this is when we're looking at people outside of your company. These could be 1099 workers, or it could be a whole other firm that you've hired, not in a 1099 situation, just under some other type of contract. So the important thing to note here is they have to be doing R&D, but we also are going to revisit that funded research test, and it's going to point the other direction now. At this point, what we want to make sure you're still bearing the economic risk. So now we do want you to pay people on a time and materials basis. So we do want you to hire them on an hourly basis so that you bear the economic risk, because that is when you're going to be able to take that credit. And we want you to retain substantial rights as well. Like those are the two things that you need to make sure that you're doing. Even so, and this is where the question of some of the things that we can do for you is advising about the impact here. You'll see that it says 65% of the amount paid to a contract researcher for qualified services. So when you're looking into, is it better if I have employees doing my research or having a contractor do it? Well, when it's an employee, you can take 100% of their qualified research. When it's a contractor, only 65% of their qualified research. So that's sometimes something you want to think about, is it worth taking on employees rather than having contractors? So we can help you with running those numbers and giving and advising as you move forward and think about how you want to expand. So same kind of, as far as the actual work being done, it's the same sort of test as you would use for your employees, but you just have to have that added layer of making sure that you're bearing economic risk and retaining substantial rights. All right, so this page has some typical examples of qualifying activities. I'm not going to read through all of them, but essentially it's new and improved products and designs, anything where you're having to do some experimentation, anything where you're developing more efficient processes or technologies, any of that sort of work. You can take a second to read through these, but essentially development is what we're talking about. Moving forward, new functionality, improved functionality. Those are the sorts of things we're looking for. All right, so now we're going to talk about quantification of the credit. What's in it for me? Essentially, who is going to who can benefit? What's that benefit look like? So in general, if you have one or more employees, if you have $250,000 or more of wages or 1099 expenses, if you're any kind of a flow-through entity, and if you're a C Corp, most likely these are going to be that's where you start to say, okay, probably there might be some R&D benefit for you. I recently talked to somebody who was doing some great, really qualified work, but they didn't have any employees yet, and all of their contractors were outside of the US. Well, there's no R&D benefit for them yet, but there will be as soon as they start to have employees inside the US or some contractors in the US. So these are generally where, if your company is this size or larger, probably that's where we're going to want to start talking about the R&D credit. So our overall assessment approach is that we start with a conversation with you or with your CPA, depending on what you're more comfortable with. Give an overview of the credit, not quite as in-depth as this. little more high level. And we talk about the structure of your company. We talk about what do you typically do? What are your focuses? What are you actually working on? And then we give you some projections, basically kind of a benefit analysis of what we think your R&D credit will likely be. And then we send out a letter of engagement to you to get you started. That's how it works when you go through an R&D process with us. Usually there's a contingency fee, and you do a small retainer, pay the balance when you get your actual pro forma form that your CPA is going to file for you. And then we also release a technical report for your records so that you can see that. In general, in the chemical engineering space, around 33% of your expenses, like the wage expenses, usually are likely to be qualified research expenses. Sometimes it's more than that, depending on what kind of work you're doing, but that's generally where it falls. And in general, you can expect around $7,000 to $8,000 of credit for every $100,000 of QREs. That's usually where the math comes down. We also evaluate state credits. So if you're in a state that has an R&D credit, we can look at that as well. For example, in the state of Texas, there is an R&D credit. It's not the biggest R&D credit, and they do prefer to see more manufacturing companies. But if your company is doing manufacturing, that's something that you might want to look into. But other states, a lot of them mimic the exact language of the federal credit, so it's always worth it to look into it. In addition, when you look at doing an R&D credit, you can actually go back 3 years, and as we discussed, if you're in net operating losses, possibly further than that. But you can look back at doing the prior 3 years. So for your first study, you might be doing as much as 4 years worth of tax credits. So it can be a really good benefit, especially in that first year when you're looking at multiple years. All right, so some some things to know about the R&D credit. There are some different approaches and uses we talked about. There is a carry back and a carry forward, and we've also talked about the fact that we've had some changes in the corporate tax rate. We've had some changes in the past, some potential changes in the future. As that fluctuates, having the R&D credit on your books can be a really valuable thing to have, because as rates have changed, the benefit of giving yourself bonuses or prepaying your rent or things like that to try and lower your tax liability can decrease a little bit. And so having the R&D credit there to help lower that tax liability, there's only so much you can prepay to try and get your expenses into a current year. There's only so much you can do some of that finagling of your taxes. So having the R&D credit is a great way to just be able to keep some money in your company, just lower that tax liability. The other nice thing is, if you are a C Corp, the R&D credit goes on your books. So it actually, even if you're not using it right now, maybe you don't have tax liability, it's something that carries with the company and is an asset that the company then has. So if you're thinking, I'm not sure if I'm going to continue with this, I'm thinking I want to get out and do something else, if you're thinking about selling it, that will be a part of the value when the company is when evaluation is done to sell the company. So it's a valuable thing to have just on your books. All right, so moving on to jump starters. So some ideas to maximize your R&D credit. Tracking your R&D supply costs in a separate general ledger is very, very helpful, because like we talked about, there might be all kinds of chemicals or different materials that are going into your testing. And if you're not tracking them separately, it might be really hard to actually quantify what your supply costs will be for your R&D credit. So if you're thinking about taking one, starting to track that can be really great. Some other things, make sure that when someone hires you, you're being hired on a fixed fee basis. That's really helpful. When we already talked about the issue of you needing to bear the economic risk. So sometimes looking at restructuring some of your contracts is a good way to go. By that same token, hiring your contractors on a time, materials, or hourly basis is a good thing to do if you want to maximize that R&D credit. Using time tracking. You don't have to use time tracking to take the R&D credit. You can use the actual standard is reasonable estimates of your qualified research expenses. However, if you can use a time tracking software, that is a great way to keep track of your R&D, and it's the IRS definitely likes to see time tracking when it's available. Now they understand that may not happen, and that's okay. If it's not your industry standard, it's all right. But time tracking is great if you can institute it. And don't overlook those direct supervision and direct support activities. So like we talked about, there are some people who you may think, hey, that's not a super technical person, but they might still be in direct support or direct supervision. That might still be something you can take. All right, so I want you to know we have an ebook available to our AIChE members, and so there's a little link there for you to take if you want to learn more about the R&D credit, or if you just want to review. It's got some of the information that we had here. And now I am ready for questions. Are there any questions about the R&D credit or its application?
Thank you very much, Rebecca. I'm very happy to hear your presentations. We have also some other people who joined during your slide delivery. So I'm going to open the floor by asking people to unmute their microphone and ask questions. I have kept some questions also from for as a backup, but I want to give the floor first to our attendees. So just going to be probably giving them some time to think. But so in the meantime, I want to say that I personally learned a lot of new things. I thought by being 30 years in the R&D business, I would know. Of course, that's not my field of expertise, but this is really good to talk to the experts who have that expertise. And I think it's useful for information. A lot of our people, of our members are consultants, or they have small businesses, medium-sized business, whatever. One thing I was going to ask, you mentioned quality work is not does not qualify. How about work that relates to health, safety, and environment related tasks?
Okay, so some of that is qualified and some isn't. So when we say quality control is not qualified, what we're saying is really what we mean when we talk about quality control in that context is when you already have something in production and you're just doing your quality checks to make sure everything is still up to the right quality, that's not going to qualify because that's really after production. However, when you are looking at, hey, we've been doing this process since 1953 and safety standards have really changed and we're not sure if this is really the best way to do this, we might need to redo this process or create a new process so that it is safer or so that we're getting the same quality, but it's going to function differently. That is something that we can look at. That is something that we can take because you're looking at making a major functional improvement because it's a safety improvement, and that is going to be considered a functional improvement. Similarly, a lot of people are seeing changes for more sustainable practices. So sustainability is a big question right now in many industries, and so a lot of those a lot of times when we're thinking about changing our processes or trying to improve our processes because we don't want as much waste product, we want to use that waste product differently. Some of that is going to be qualified as well. So some of those, yeah, definitely some of the health and safety issues, as long as you are working on improving the functionality of safety, essentially, is what we're looking at. Yes, those are going to be qualified activities.
Thank you, Rebecca. That's very helpful. Appreciate it. Another thing that you already answered, of course, is about the capital expenses, so I don't have to repeat that. The one that was partially covered, but I want to clarify, is about the country of headquarters of the company. There may be a foreign headquartered company, but they may have offices in the US. How is this handled?
Oh yeah, so we definitely have had that situation before. So what you end up doing is American tax credit, right? So it's going to work against the tax liability that you have for your American portion of your company. And so your people who are doing R&D, the only people we can qualify for the R&D credit have to be physically inside of the United States. But it's okay that the money that is coming in is flowing through maybe to a parent company in another country. That's fine, as long as you're paying taxes in the United States, which if you have a location here, you surely are. You can still use the R&D credit to reduce your taxes on your American taxes on your American portion of your company. That's I've worked in the past with several companies that had parent companies overseas, and it potentially could be an issue if you had a flow through structure where it was flowing through to an individual overseas, but even still, they still would have to pay American federal income tax on some portion of that. And that's what's going to be reduced. It's just going to be an issue of making sure you're identifying the right person or entity that it's flowing through to. But the United States is very good at making sure that people do pay federal income tax on money that they make in the United States. So
For sure.
there certainly will be some way for them to use that R&D credit.
And I think we noticed that when the working from home guidelines came through, because they said you may be working for an office or for an entity that's in the US, but if you decide to travel abroad to Mexico, for instance, go to your vacation home and work from there, you cannot do that because you're creating economic activity in a different state, and that really creates tax events, right? So
yes,
it has to
exactly.
be geographically and physically located in the US, that economic activity. Okay, I got you. I think we have a lot of members who would like to know they work in plants, right? And they own maybe mini pilot plants or taller facilities, and they have a lot of operational activities. Can you give us some guideline? What part of those operational activities could be qualifying? For instance, you may have a troubleshooting for things that don't go very well, so there may be an opportunity to fix things or improve things. Another one could be investigations for incidents that happen. How does this apply?
Okay, that's a great question. So I'll answer incident investigation first. So sometimes the actual investigation of the incident itself, probably not going to be qualified because it's before you start trying to develop an answer, right? But oftentimes an R&D project does come out of that incident investigation. So for example, let's say you've had a safety issue in your plant where multiple times you've had a piece of equipment that is just not functioning correctly, or it continuously has an overheating problem or something like that. At some point, you're going to have to make a decision. We're going to have to change our manufacturing process. This is not giving us the functionality that we need. So at that point, you're saying, we're going to create a new process, or we're going to improve this process in some way. We're going to make a major functional change here because this is not functioning correctly. So any of that kind of work that might come out of an incident report, that's going to be where your R&D is. Similarly, when you say troubleshooting, if it's a fairly kind of minor fix, probably that doesn't rise to the level of R&D. But when you start to get into saying something like, we've had this continuous problem where as we move through this process, we get sticking at this one point, or we're having too high a rate of breakage at a certain point in this process, or something like that. Then you start to have to redesign your process. You have a functional problem in your process, and that's when you start to get into an R&D project. So the real question is, are we looking for an improvement in quality? Are we looking for an improvement in functionality? Is it an improvement in reliability? And is it something that we've had to make any kind of a major change in order to get there? So if it's something like, if it's something fairly minor, like every day we're having an issue where this particular machine gets gummed up, so we're going to institute a cleaning procedure. Okay, probably not that. Probably we're not rising the level of R&D. But if you've had to go through a process of experimentation where you're saying something like, we're making we're making lenses, and when we make these optical lenses, we're getting a certain level of breakage every single time. Let's try, if we're using a different solution, let's try let's try making it differently. Let's try another thickness and see if we can get the same functionality. Well, now you're having to go through quite an extensive and iterative process of experimentation. That's different. That's definitely going to be something we can qualify.
Very nice. Thank you, Rebecca. We have another couple of minutes. I would certainly like to open the floor again to our participants to see if there is any question. And we are very fortunate we were able to record the session. So therefore, if any members have a desire to watch it offline, certainly that's the new way of working sometimes. And especially if they were in the workshop one and they had to choose one of the two, I think that many people like that probably will have. Maybe we'll make an announcement on that. And I will therefore ask I'm going to stop the recording and thank